Well, hello, I'm Rebecca McLean, and welcome to Women of Color Money and Legacy, where I talk money matters. I share strategies to empower us to become financially literate in terms of managing our money wisely, building generational wealth, financial freedom, and creating a lasting legacy. It's a journey of learning and growing together. Now, I'd like to give a shout out to all of my new subscribers. As always, I'm so delighted to have you part of this community. I hope that you're enjoying the holiday season and staying safe. And please do your part to protect yourself from burglaries and credit card fraud while you are out and about shopping during this season. And make sure that you lock your homes and your vehicles. And when you're out in shopping centers, park in areas that are well lit and near other vehicles. Hide any gifts or other valuables in your trunk or underneath the seat in your car. You also want to check your bank statements frequently to ensure that you are not a victim of credit card theft or fraud. Because when people are handling your credit card in these stores and restaurants, they could be taking down your card information. So just be careful out there. Just want to throw in that precaution. Now, what I really want to talk to you about today is retirement. At what age should you retire? And let me start by saying that when you begin receiving Social Security benefits, you are considered retired. Now, the amount of your monthly benefits is calculated based upon your average monthly earnings during the 35 years in which you earn the most. Then you can actually check the estimated monthly retirement benefits by creating an account with the Social Security Administration by going to their website. Now, it will give you a forward estimation based upon your current earnings. And of course, that will, in all likelihood, change over time. So you want to check it out maybe every year or every 5 years, depending upon how close you are to retirement. Now, you can start receiving your Social Security benefits as early as 62. Now, should you elect to wait until full retirement age of 67, your benefits will be significantly more, about 30% more on average. Now, should you decide that you're going to delay retirement until the age of 70, your benefits will be 60% more on average than the amount that you would receive if you elected to receive your benefits at 62. So let's say that your monthly benefits at 62 is $1,000. And that amount would increase to $1,300 per month were you to wait until the age of 67 to begin receiving your benefits. And it would increase to $1,600 a month were you to delay payments until the age of 70. So as you can see, your benefits increase the longer that you delay retirement up until the age of 70. Now, you can work beyond 70, but know that your benefits will not increase. You will not get any additional increases. So it really doesn't make any sense to delay taking your benefits beyond the age of 70. But whatever age that you choose to start receiving your benefits, that's going to be your base amount for the rest of your life. And it's entirely up to you at what age you decide to begin receiving retirement benefits. If you start at age 62, the amount will be smaller, but for a longer period of time. And if you start at full retirement age or later, your benefits, of course, will be larger, but for a shorter period of time. Now, there are some factors that will come into play when deciding upon the best age to retire. And let's take a look at a few of those. In fact, I'll share 7 things you'll want to consider when deciding upon what age to retire. And these are in no certain order. Number 1 is your debt load. Now, carrying a lot of debt may require that you retire later rather than early. Now, every dollar that you owe reduces your retirement income. And as you're well aware, retirement income is fixed. So you want to work on getting out of debt beforehand. And right now, we're experiencing a rise in costs on consumer goods because of inflation, and seniors are being hit pretty hard. Now, the government has decided that they're going to lower Medicare insurance payments by $5 per month beginning in January, so that this will give seniors some relief. And I guess $5 a month is better than nothing, right? Now, the Fed has been aggressively raising interest rates throughout this year in order to get inflation down. That means a rise in interest rates on both secure and unsecured debt. So you want to put yourself in the best position to avoid any of these unforeseeable economic swings. So start working on getting out of debt as soon as possible so that you don't carry any revolving debt into retirement. Now, mortgage debt is one thing, but you want to work on eliminating like student loans, personal loans, and credit card debt. Okay, so the second thing that you want to consider when deciding on the best age to retire is your life expectancy. First of all, nobody has a crystal ball that can reveal how long that you're going to live. We just don't know. So when planning for retirement, we look at life expectancy, our current health conditions, and family history. Now, what we do know, according to the Social Security Administration, is that life expectancy has increased. The life expectancy for men currently has increased to the age of 84, and for women, life expectancy has increased to the age of 87. And this data is to help you consider how long you expect to live. Now, take a look at your lifestyle and your family history. Now, if you come from a family with long life expectancy, you might want to delay retirement until the age of 70 in order to receive higher benefits. Now, if on the other hand, you come from a family with shorter life expectancy, you might want to start receiving your benefits early. It'll be at a lower amount, but over a longer period of time. Now, my mother passed away in 2009 at the age of 85. She was a strong and healthy woman and rarely ill. Now, until my mother's death, the only time I can remember my mother being hospitalized is when she had surgery. She was in her early 60s at that time, and she needed to have gallstones removed, and again when she had a urinary tract infection. Now, she lived out in the country and cooked her own meals, so she rarely ate any junk food, and she could walk for miles every day up until about the age of 80. Now, her death was unexpected. It was just out of the blue. There were no outward symptoms or anything. She had this big apple tree in her front yard, and she was actually out picking apples from the tree when she had a brain aneurysm and collapsed and never regained consciousness and passed away shortly thereafter. Now, I look at my lifestyle compared to hers. I've been an avid exerciser since my late 20s. I eat healthy for the most part. I'm in great health. So I do expect to live at least 85, possibly longer. I plan to delay retirement until the age of 70 and receive maximum benefits. And I seriously doubt that I'm going to stop working at 70, but that's when I plan to begin receiving benefits. So considering your life expectancy can help you decide at what age is best to retire. Do you find this video interesting so far? Please don't forget to subscribe to the channel. So let's move on to number 3, and that's health insurance. Now, you want to remember that Medicare usually doesn't start until you reach the age of 65. So if you stop working before 65, you're no longer covered by your employer's sponsored health insurance. You'll have to pay out of pocket, and the current Medicare premium is $170 a month. And as I said, the Social Security Administration recently reduced the Medicare insurance payment by $5 from $170 a month to $165 so that seniors can get some relief because they have a fixed income and due to inflation. Now, the premium reduction is scheduled to go into effect in January of 2023. Now, what most people might not realize is that Medicare doesn't cover the cost of everything 100% of the time. You may still have to pay out of pocket in part for, say, prescription drugs, dental insurance, and some medical procedures. And the question becomes, do you have the means to pay out of pocket for health insurance should you decide to retire early and you no longer have your employer-based health insurance? And this is definitely something that you want to consider in deciding at what age is best for you to retire. Okay? Another thing to consider is your children. Do you still have dependent children? Now, couples are waiting later in life to begin having children, so it's not uncommon to still be supporting underage children in your 60s, both in high school and in college. And children are a huge expense, especially when it comes to tuition. So the age and stage in life of your children may shift your timeline for retirement. You'll just have to start planning as early as possible. So you will need to take this into consideration when it comes to deciding at which age is best for you to retire. And number 5 is marital status. If your spouse dies and they work long enough to be eligible for Social Security, then you can begin receiving reduced benefits as early as 60 years old. Now, you can switch to your own benefits as early as 62. Now, if you have a disability, you can begin receiving the dead spouse's benefits at 50 if the disability started within 7 years of your spouse's death. If you remarry after the age of 60, 50 in case of disability, your remarriage will not affect your eligibility for survivor's benefits. And there are other surviving spousal or family benefits available that you can look into that can play a part in helping you decide at what age is best for you to retire. And number 6 is employment status. And as I stated before, you can continue to work and earn an income while receiving retirement benefits. However, there are limits on how much you can earn each year between 62 and your full retirement age of 67 and still get your full benefits. Now, the Social Security Administration has different earning limits depending upon the age that you elect to retire. Now, currently, the earning limit for people who elect to retire before their full retirement age is $19,500. In this case, the Social Security Administration will deduct $1 from your benefit payments for every $2 that you earn above this annual limit of $19,500. So just know that when you retire before full retirement age, you have a specific earnings ceiling. And should your earnings exceed this ceiling, you will have your benefits will be deducted. Okay. Now, on the other hand, should you start receiving benefits at full retirement age, your earning limit jumps to $51,900. And these are the earning limits for 2022. Now, these limits are subject to change periodically, of course. Now, in the scenario with the full retirement benefits, the Social Security Administration will deduct $1 from your benefit payments for every $3 you earn above the annual limit. So do the math, and that will help you in deciding at what age is best for you to retire. And number 7 is other income. If you have other income coming in, you might decide that you want to delay retirement. For example, you might have pension income. And pensions used to be pretty common, but has become somewhat rare over the past 20 years. But a lot of people still have pension benefits. And you might have an IRA or 401k income or investment income outside of your company-sponsored plan. Now, with additional income coming in, you could choose to retire early and invest your retirement benefits rather than spending your benefits. So having additional income can help you decide whether to retire early or delay your retirement. So there you have it. An overview of retirement planning and 7 factors to consider when deciding upon the best age for you to retire. Now, that's going to wrap up all that I want to share with you today. I hope this information has been of value to you. I do want to thank you for tuning in, and I'll be back again with another Women of Color Money and Legacy video next week. Please don't forget to like, share, comment, and subscribe to the channel. Click that notification bell to receive an alert each time I upload a new video. Take care and bye for now.